guys, welcome back to my favorite channel. Right now, I want to say about working with PHI-ellipse is easy if we understand the rationale behind them. Working with PHI-ellipse is easy if we understand the rationale behind them. PHI-ellipse develop over time. The magic of PHI-ellipse is that the perfect form exists inherently from the beginning. But as users and investors, we only recognize the PHI-ellipse at their very end. Although all PHI-ellipse share a common case structure, their final forms vary, becoming thick or thin, long or short. They are individual manifestations of small trends, moves, or parts of the bigger picture of a circumventing major trend. The high in downtrends and the low in uptrends of the corrections wave 2 in our wave counts determine the slope of a PHI ellipse. Because we always need 3 points to draw the first pictures of a PHI ellipse, we then have 2 possibilities. In the first case, the low of the corrections in wave 2 in an uptrend is above the bottom of wave 1. Vice versa for highs instead of lows in downtrends. Depending on whether we have a 38%, 50%, or 61% corrections, the slope of a PHI ellipse will be bigger or smaller. The second possibility is that corrections wave to goes below the starting points of wave 1 in an uptrend or downtrend. In this case, the slope of a PHI ellipse could turn out very small. As shown in figure 522, a small PHI ellipse slope indicates a sideward market. PHI ellipse work on monthly, weekly, and daily charts, and those are the data compressions rates on which we have conducted our analysis. When it comes to intraday charts, PHI ellipse will also work on hourly charts. However, to avoid complicating the analysis at this point, we defer the descriptions of intraday samples until later in this chapter. The length of the corrections in wave 2 after the first impulse wave often determines the length of a PHI ellipse. We cannot know in advance how long the formations of wave 2 will last. However, so we do not recommend trading if the formations of a PHI ellipse in progress. Wave 3, as the second impulse wave in our count, must be at least as long as the first impulse wave. Therefore, we have to adjust the width of PHI ellipse on multiple sideward patterns. We now focus our analysis on sets of daily charts of the Japanese yen cash currency and the S&P 500 index. I mentioned we have selected these products for their public interest, volatility, and liquidity, and because they especially represent investors' behavior, which is the underlying maxim of Fibonacci analysis. In principle, of course, PHI-ellipse can be applied to every product traded. We rely on only an 8-month time span for each of the two products, and during that time not one PHI-ellipse is like the other. This is similar to the work we have done with extensions and corrections. Even though we apply the ratio 1618 to different pricey moves, the size of every pricey move results in the pre-calculations of different pricey targets. The same results occurs when we work with PHI-ellipse. We do not analyze a single swing pattern, but rather a complete set of swings, smaller ones and bigger ones. Therefore, a major PHI-ellipse will circumvent the complete and much bigger price pattern with sometimes many or sometimes very few smaller pricey patterns in between. PHI-ellipse have their roots in the Fibonacci ratio PHI and the ratio from the PHI series. We can combine PHI-ellipse with other Fibonacci tools, such as the Fibonacci summation series, extensions, and corrections. Doing so gives us an early indications where a PHI-ellipse might end. Because PHI-ellipse develop over time, the combinations of Fibonacci tools is helpful to confirm multiple PHI-ellipse in progress. Based on the knowledge we accumulated from the analysis of extensions using the Fibonacci ratio 1618, we can pre-calculate a price targets from the amplitude of the first impulse wave inside the PHI-ellipse, independent of any future market moves patterns. We can assume that if the market price ever reaches the pre-calculated price target, it might also mean the end of the producing PHI-ellipse in price and time. PHI-ellipse on Japanese yen cash currency sample data to begin our discussion of applications of PHI-ellipse to market data. We first show a daily chart on the Japanese yen cash currency with no added tools. In figure 524, the plain chart represents just the data stream and enables the analyst to see how PHI-ellipse will later fit into the overall picture. The second chart in figure 524 contrasts the set of open, high, low, close data by integrating PHI-ellipse, which serves as the backbone of our analysis of the relevant market moves. The relevant PHI-ellipse have been numbered PHI-1 to PHI-8 in figure 524. We revert consecutively to all 8 PHI-ellipse and demonstrate in depth how they were generated. The basic structure of PHI-ellipse is always the same. When drawing a PHI-ellipse, its borders must define and touch at least 4 points. The 4 points are 1. Starting point of the PHI-ellipse, 2 left side, 3 right side, and 4 bottom of the PHI-ellipse. The starting point is usually the highest or lowest point in a pricey moves. But there are exceptions in patterns such as irregular tops or bottoms, overlapping PHI ellipse, or very small angles in a PHI ellipse. PHI ellipse PHI-1 is selected in figure 524. Consists of a simple three-wave pattern that should by now be familiar to readers. Okay, guys. Until here for today. See you in the next video. Bye.